Joining us now is Gaurang Shah, the Assistant Vice President at Geojit BNP Paribas. Mr. Shah, thank you so much for joining us. The big development this week has been that presidential directive to Coal India. It exposes the company to a lot of risk of penalties if there is a shortfall in supply. What's your call on the stock right now? As a retail investor holding it, would you recommend that I find an opportunity to book out?
There is a substantial amount of cash on the balance sheet with Coal India, as all of us know, and I think with the government disinvestment target going haywire, they needed to make good for those losses or those targets which are not met with. The concern over here again is that if you're going to import coal, then definitely you will be doing that at a higher cost than what you would have domestically procured via mining of coal. But that has not been going through in a very smooth note. We have issues with Environment Ministry, Mining Ministry, and the amount of coal and amount of natural reserves as far as coal is concerned that Coal India has, I think it's humongous. But I think the stakeholders should stand to the need of the hour, and the government, in case if they have to sign this FSA, I think compensation should definitely be in place for Coal India, because they cannot finally pay at a pay higher cost for importing coal and then supply to the power generating companies at a lesser price, because in effect you are not going to make any profit but only make losses. So that's a concern, and I guess this particular issue is definitely going to get answered as we have more clarity coming out.
So what would you recommend now for a retail investor who's holding Coal India shares? Would you say wait and watch and see how this plays out, or should they be looking at for opportunities to book out?
Look, I would not recommend to opportunities to sell and exit if you have a long-term view. There are concerns, and likely pointed out by you and me, that these concerns look more of a short to medium-term nature, not a prolonged one. Secondly, on the fundamental side, given the company's balance sheet and the assets that it has, I would definitely recommend a hold on Coal India. And I think you could possibly see targets of in excess of 425 in the next 12 to 16 months.
Alright, a target of 425 on Coal India. Remember, Gaurang telling us to hold on to that stock right now, especially if you're a long-term investor. It doesn't make sense to book out at this particular point. The clear gainer, Gaurang, obviously from all of this, will be the power companies who will benefit from that secured supply of coal. So if you were to pick a power stock to bet on for the long term, which one would you pick?
Well, amongst the private players, there are a whole host of private players in the power generation. And, the thing is that almost 60% or more power generating capacity in our country is driven by fuel as coal. And coal is utilized to fire up the furnaces. So if I'm looking at as a stock idea and a fundamental call on power generating companies, then the best one suited to me, according to me, it's Tata Power. And of course then NTPC, because that particular company, NTPC, though it's a PSU, it has got huge capex plans going forward from here on. And at one end, Coal India might possibly lose, because if it has to import coal and supply coal for the to the power generating companies, then there are very few companies in the power generating sector which will get benefited directly with this particular arrangement. So Tata Power and NTPC are the one, and I guess Adani Power, but my preference will definitely be Tata Power and NTPC.
The next sector that I want to talk to you about is, of course, the auto sector. We saw those really strong numbers coming in from March sales. This was largely because of fears that prices will go up in the new year. But what's your call on the auto sector? The management of Maruti has told us they're expecting a tough first quarter and a tough first half of the year.
On four-wheeler first, I would like to comment. We are positive on Tata Motors and Mahindra & Mahindra. Maruti, like you rightly mentioned, the numbers also month on month were not a little bit, not as impressive as it was, because of the market share that it lost out due to, shortage of diesel engines. And of course now Maruti is tied up with Fiat for 3-year time frame to supply diesel engines, and we need to see how quick and how fast Maruti can, regain the lost market share. So that possibly will be visible in the next 2 months, because we'll have, month-on-month numbers coming in, and we'll be in a position to gauge how good Maruti has been able to capture that lost market share. So our order of preference is Tata Motors 1, M&M, that's Mahindra & Mahindra number 2, and then Maruti after looking at 2 months sales numbers. On the two-wheeler pack, definitely the frontline two-wheeler companies, Hero MotoCorp and Bajaj Auto are preferred choice. But at the same time, in the same breath, if somebody's got a risk appetite, then I think Ashok Leyland and TVS Motors should not be ignored.
All right, Tata Motors, M&M, Ashok Leyland and TVS Motors for those of you who are considering the auto sector. It's time now for our portfolio question. Now, every week, our guest looks at the portfolio of one lucky viewer and tells him what he should be holding and what he should be selling. This week, Amit has written in. He's a first-time investor and he wants us to help him with his portfolio. He starts off with BHEL, which he bought at 260, and ITC, which he bought at 206. He also has REC at 192. Of the three stocks, which ones would you recommend continuing? ITC and BHEL are both very strong stocks. Hold them for the long term, Gaurang?
Yes, I would recommend both of them to be held out. And we had numbers coming in from BHEL, though the order book was looking a little bit weak. Execution is a little bit issue for not only for BHEL, but the entire cap goods stroke engineering sector because of policy paralysis. But given the kind of numbers that it has come out with in the recent time, I think your downside is really protected. So yes, you can stay invested, and an incremental upside, if you have a longish time horizon on BHEL, I think you can at least expect on the conservative side 15 to 20% upside from here where it is closed. That's BHEL. And yeah, I mean, REC also looks very positive after the renewed developments and the policies that were cleared off in the power generating pack. Given the rural electrification distribution, REC tends to benefit a lot. So you can hold on to both these stocks.
All right, the next on his list is UCO Bank, which he bought at 46.5 rupees. It's now trading at 80, which means he's obviously done well on that particular stock. Sterlite Industries at 122. Would you recommend he continue both of these investments at this point?
UCO, the proof of the pudding is always lies in eating it. So if you're getting profit at the levels at which he's bought it, you take the percentage return that he's getting. My advice is to take money off the table. And as a brokerage house, we are more positive on private sector banks rather than PSU banks. So maybe he can make a shift, book profits out of UCO Bank, buy something like a Yes Bank or an IndusInd Bank, or a smaller bank like a Development Credit Bank, which is a turnaround story. On Sterlite, we are positive. There are clouds overhang in terms of China slowdown in the metals because of that. But yeah, we look on the flip side. Domestic demands looks to be going up, so we can definitely hold on to Sterlite. But UCO, I think book profits and make a shift to Development Credit Bank.
All right, last on his list, Provogue, which he bought at 33 rupees. It's now trading at about 15. And PTC India Financial Services, which he bought at 16.5 rupees, which is currently at 16 rupees. What would you recommend he do with both of these investments?
Well, Provogue, no-brainer. He definitely has to exit ASAP, that is as soon as possible. If I'm asking him to exit and if there is an investment idea that I would like to recommend, then in gas distribution, we like companies like Petronet LNG, Indraprastha Gas Limited, Gujarat Gas. I think these are some of the names that I can, just flip off the cuff where he can get invested. On PTC, things are not looking all that rosy, but they are not looking all that bad either. So as of now, we can definitely hold on to it.
All right, Amit, we hope that helps with your question. Remember, you can always reach us again if you have any more doubts on your equity investments. Write to us on the email ID at the bottom of your screen. Gaurang Shah is with us as well, and he's done some homework on a stock that he thinks you should buy right now. The stock he's recommending this week as his value pick is Barti Airtel. Barti Airtel ended the week at about 329. Gaurang, this has been a darling of market watchers for a while. Tell us, why does it make your list this week?
Yes, so the rationale first. I think at 320, 330, your downside is very much protected. Concerns in terms of overseas operations that they took over Zen is overdone. Negativity is priced in. 2G, 3G, the subscriber base, ARPUs from here on looks to be growing. There would be, policy decisions by the TRAI and DOT in terms of revised tariff, and that will improve the revenues for this particular company. They're also venturing into newer verticals which will do value addition. From here, if you ask me the incremental upside on the, on return on capital, then we're looking at a price target of about 445 initially to about 465. And if somebody needs to give a little bit of longish time horizon, definitely this particular stock can grow. Even in a worst case scenario, I don't think Bharti Airtel has slipped below 280 to 265. And at these levels where it is right now, 320 to 330 levels, you could definitely initiate a buy right now over here. Start accumulating it over the next couple of months in a phased out manner. The rupee dollar equation also, which was a concern in terms of currency fluctuation, I think that has also been factored into the price. The 2G auction, if it happens into the whole matter which had gone to the Supreme Court and there was some license which were pulled back, etc., etc., Barti Airtel can actually go ahead and bid for that in case if they plan to do that. Of course, there is no clarity as of now, but in the near future, I think if that comes onto the block, then definitely the kind of financial strength it has got and the clean slate, it will stand to benefit from these auctions also.
That stock has been, trading range bound in the last couple of weeks. It's waiting still to break past 340. Now I want to take you back to when you mentioned that we should pick up over the next couple of months, maybe pick up a little bit of Barti Airtel at each point. What price range should we be targeting when we look at buying Barti Airtel and accumulating it?
I would definitely recommend to initiate a buy from the current levels, and if you get a dip of about 2 or 3% over a period of time, remember one thing, since this stock has already corrected and has not really contributed on the upside in the recent times when you see the market go up, if the market has to go down, don't expect Bharti to go down by 5-10%, because that will not be happening, and since this stock has not been performing well, it will not go down much also. So at these levels where it has closed, I would definitely recommend and initiate a buy over here.
His second pick for the week is Sun TV. Sun TV Networks ended the week at 303 rupees. Gaurang, tell us why the company makes your list this week.
Well, first of all, I think it's a dominant player down south. It has got a bouquet of channels to offer. Secondly, you might see the advertisement rates getting revised down south sooner than later. There were concerns in terms of negativities, management, etc. A while back, we saw the stock correcting quite sharply. Post that, it has recovered. And the entire media pack, I think there are very selective few names that you can actually come out with a buy recommendation. And on the fundamental side, that is. So, you keep these things in perspective, and of course the growth prospect going forward, new channels getting launched, etc., etc. And now we have revised our targets upward to about 390 rupees.
Like you mentioned, we saw lower ad revenue year on year over the last year. But are you hoping for the digitization of that cable industry and those new launches to give it that target, to give it that trigger for the next move?
I think in terms of digitization, all those channels which have got ability, technology, financial backing, etc., etc., will definitely tend to perform well. And of course, I believe July 2012 is the deadline where the authorities have said that all the cable operators, stroke DTH guys will have to transform to digitization and give the superior quality audio, video, etc. Given these kind of backdrop and the strengths that we feel Sun TV has, we don't see any reason why it will fail on any of the parameters. And of course, the revenues which were looking at tag lower, I think with this digitization coming, you will definitely see ad revenues going up, not only for Sun TV, but I think the frontline media also.
I want to talk to you a little bit about SpiceJet as well. Explain to us, as a retail investor, if we do get into Sun TV at this point, how badly will the troubles of the aviation industry and SpiceJet in particular affect my investment in Sun TV?
By investing in Sun TV, if one has an appreciation that because it's a group company, SpiceJet that is, and it might possibly follow the route in which Kingfisher has gone through, we don't feel that that is justified. And everything said and done, in the recent times, there was a positive announcement that we also heard from SpiceJet that they have applied to the authority for import of ATF. The only problem is logistics and infrastructure. But I guess since they have applied for import of ATF, they would stand to, save at least about 7 to 10% on fuel expenses. That will again add to the profitability, because whatever you save straight away translates into your profitability going up.
All right, so these are the two recommendations we're talking about this week. We talked about Sun TV and Barti Airtel. Gaurang, we have a quick question for you. Sukumar has written in. He has 29 shares of Biocon, which he bought at 272. He wants to know, should he hold on to these shares at this point, or should he sell them? Biocon ended the week at 242. We know there's a lot of pessimism over the termination of that contract with Pfizer. It was worth $350 million. Do you think that pessimism has already been worked into the price, or is there more punishment for the stock going forward?
The price correction on fallback of that tie-up being called off with Pfizer did translate into a huge correction. I think before that announcement came through, it was trading at about 280, 285. Correct me if I'm wrong. Corrected to close to about sub 240 levels. From here on, I think that negative news has already been priced in. The amount of money that has been invested by the management of Biocon in the R&D, and of course the number of products that will come on stream in the next 6 to 12 months will definitely give a visibility not only in terms of top line growing but also the revenues growing, which might translate into upgrades over a period of time. He bought it at a little bit higher level, but that's no reason why I should ask him to sell it off. Stay invested, maybe sub 240 levels, you have investable amount, get invested, try to bring your average down of investment, and I think over a period of time you might see it surpassing close to about 310 to 320. That's what my gut feeling with. But all these to come true, you have to give at least 16 to 18 months to the stock.
All right, so stay invested in Biocon. Last question from Srinivas. He has 100 shares of NHPC which he bought last year for 25 rupees and 98 paise. He wants to know if he should hold on to this stock, or is there another stock that you would recommend make more sense for him at this point? NHPC ended the week at 20 rupees. Gaurang?
Firstly, a disclosure, we do have buy coverage on NHPC, so I see no reason why I should tell him to exit. Yes, the stock has been an absolute underperformer and a burner on the portfolio, because since the time it got listed, it has not achieved the issue price, which was, I believe, correct me if I'm wrong, at 36 rupees, has been on a downtick since then. Stay invested. The recent developments in terms of power sector, policy decisions by the government to answer the fuel linkages shortages in terms of coal supply has been answered, and I guess new revenues will definitely open up in terms of capacities coming on stream, and of course the approvals getting smoother nodes.
Gaurang, thank you so much for spending time with us this week. We hope you enjoy your long weekend. For those of you who have questions for Gaurang, send it to us on the email ID that's at the bottom of your screen.